So the first thing I wanted to compare these two companies on is revenue growth over the previous decade and provide my outlook for what I expect going forward. FedEx has increased its revenue from $47.5 billion all the way up to $88 billion, but it's down from its peak of $93.5 billion. FedEx has grown revenue at a compounded annual growth rate of 6.7% in the previous decade. Meanwhile, UPS has grown its revenue from $58.4 billion up to $90 billion. That's good for a compounded annual growth rate of 4.7%, also down from its peak of $100 billion in 2022. The reasons these two companies are down from their peak revenue is because remember back in the pandemic or during the pandemic when people were spending more time at home, people were ordering more things online, and ordering more things online facilitates the need for more delivery, more transportation, more logistics, right in the wheelhouse for UPS and FedEx. Thankfully, in the longer term, I expect a larger percentage of spending to move online. Now, I don't expect 100% of spending to happen online, but I do expect a larger percentage of consumer spending to move online because it's just so much more convenient. And brick and mortar retailers are having significant challenges competing with online retailers or online businesses or online sales. You just can't beat that convenience advantage. And what I've seen from consumers over the previous 7 years is that people are willing to pay for convenience, and if you offer people convenience, they will make that choice. The next thing I wanted to compare these two on is the operating profit margin, and these are not very lucrative industries. These two companies generate relatively low profit margins. It's capital intensive, and the trends are not moving in their favor either. UPS generated an operating profit margin of 8.7%. That's down from 13% in 2015 and down from 14% in 2005. Meanwhile, FedEx generated an operating margin of 7.7%, down from 9.7% in 2016 and down from 9.3% in 2005. Very capital intensive industry, heavy labor and capital intensive. There isn't much that FedEx and UPS can do about it other than to try and find efficiencies where they can and make incremental improvements. The returns on investor capital also similar on the downtrend, 11.4% for UPS, down from 16.5% in 2016, 7% for FedEx, down from 9.4%. So UPS with the better number compared to FedEx, but the trend line's moving downward for each.
Click the link below to watch the full video.